as the economy recovers and we get through this pandemic, what we're seeing is a dichotomy in returns a bit. You can see that the US market is really doing quite well, bouncing back from last year. And most of you have seen your investment reports. Last year ended up being actually a very good year, and is being followed by a second good year. Matter of fact, the US equities have marked 34 record highs already in the first half of 2021. It's really moving forward. You can also see good movement in international equities and emerging markets, and you're seeing up on this chart the second quarter and year to date. So the second quarter has been pretty darn good. Now, when you look at the year to date numbers, though, you do see where there is an imbalance. Equities are moving forward, but you're seeing that bonds are actually lagging. And, you know, it shouldn't be a surprise to any of our clients. We've talked about this for quite some time, that bonds are in a secular bear market. So the returns on bonds are not going to be anything near like they were in the, let's say the 2000s and before that as well. Being a secular bear markets will have many bears and many bulls in it. And the second quarter would be considered a bull for the bonds, but you can see as a whole for the year, it's lagging behind. The second quarter has not been enough to make up the difference in the losses from the first quarter. So we'll keep an eye on that, but it is an important fact that we need to be looking at when it comes to investing. More conservative investors are going to be hurt, and they're not going to get the returns that they were, maybe had in the previous decade. And we have to start looking at alternatives and more equities to get those returns the way clients need them. This chart, it's kind of a busy chart, but really the only thing I want you to focus on here is this chart's all about news. So you look at it, the blue is the economic news, the gold is market news, and the silver is headline news. And all we're trying to illustrate here is from April to today, effectively, you've got a pretty volatile market. And you can see that news is driving a lot of this. What we want you to bring away from the table on this is that the market is going to be a little bit volatile over the next 6 months, possibly going all the way into next year. But as you can see, from April to June, July, the market still is rising. So we're seeing some good things coming down the road, but expect volatility.